Hello, hello, hello. Can you hear me? Yep, audio's good. Need to figure out this. For some reason, there was an update with TradingView, and it doesn't like to work with. It doesn't like to work with Streamlabs. I don't know why. Ah, okay. That wants to work. Cool. I don't understand why that suddenly worked, but it did. So sweet. We'll reframe this. Reframe this. Blam. That's how the magic's. Seeing how the sausage is made in real time. Boom. Boom. How does that look? Frame could be wider. No idea why that wasn't working before, but here we are. Okay. Lock. Fresh notepad. Daily discussion. For 2023. Okay. So I started the stream like a couple minutes late, so we'll just chill for a few minutes and wait for people to join. How's everyone doing? You guys hanging in there with this big drop? It's so scary out there. Can you guys hear me okay? You should be able to hear me. Test, test. Yep, cool. Chat box is there. Sweet. All right, we're just going to shoot the shit for a couple minutes, and we'll start at 2:10. Starting 10 minutes late. We will begin at 2:10 p.m. Eastern Standard Time. Sorry for the inconvenience. Well, that makes me happy that worked. All right, we got 30 people. We'll do it live. So how's everyone doing? Sorry about Friday. Not gonna lie, I forgot. I forgot I was supposed to stream. My bad. There was activities the day before and such, and I just literally forgot. Let's adjust this a little more. Slide you down. Boom. What a frame. What a guy. Cool. Same? Yeah. What kind of activities, you may ask? Healthy ones. Okay, let's go and get started. All right, so let's start by looking at Dixie because it's doing something interesting while Bitcoin is continuing to drop. So typically, Bitcoin drops coincide with Dixie bounces, and that's not really what we're seeing. Yes, last week closed green, but it wasn't anything to write home about. It was like this little bummer of a green boy, and it didn't, it didn't look anything like this, where it was like a profound bounce, right? So this is interesting. But I think the main takeaway here is that we're sitting here slamming into this long-held level, this zone established in the 1990s, way back here. And it's been a point of contention, or a zone of contention, for 40 years, believe it or not. All of this time. And we are currently hitting it from the upside. Does that mean we're going to bounce? We don't know. Does that mean we're going to snap through? We don't know. But what it does mean is that whenever we're sitting on support or resistance, whether we're testing support from the top or resistance from the bottom, that is typically a point of indecision, and we should just generally sit and wait, honestly. Like, there's no rush. There's no reason to assume this is going to drop, because it's probably not, and assume it's going to bounce, because it's probably not, and whatever you pick is going to be wrong, and you're going to cry, and you're going to have a bad time. So rather than waiting and having a bad time and, like, just absorbing all of this, all of this exposure for no reason, just wait, right? If you were patient on this support, you were being rewarded handsomely on Bitcoin. Why? Because it just gave back almost a month's worth of price action. Right? So if you got long at any point in the last month, you are now underwater. And that's generally unadvisable to get long when you're running into resistance, right? So key takeaways here. Dixie is sitting at major support. And when we look at the monthly, which is starting to become relevant because we have the monthly close in a week, more of the same. It's sitting here on this macro support. And unless it closes somewhere down here, it is considered strong support. So let me go ahead and throw this style with the text on the bottom. Okay. Right? So we need to wait. All that to say is we need to wait. Currently sitting on 40-year-old support, or sitting on a 40-year-old level, let's say, on a 40-year-old level, and it has not broken yet. If you are bullish, crypto, equities, metals, etc., you want to see the 40-year-old. Is 40-year-old hyphenated, like all three, or is it just the last one? I think it's just the last one, right? 40-year-old? Yeah, I think that's right. The 40-year-old zone break. If not, it is considered support. And will continue to rain on the Bulls parade until it breaks. Notifications are super loud. Oh, sorry. Whoops. I need another notification so I can trim the noise. I had to adjust my desktop audio from the market power hour, and I didn't go back and fix it. Sorry. Can someone follow me, or can someone unfollow me and refollow me just as a little test real quick? There, is that better? Still a bit loud? All right, one more time. Try now. I reduced it big time. How's that? Better? Yeah, better? Okay, cool. All right. Anyway, so what does this mean, right? What are the takeaways here? One, it's generally not a good idea to try to front run a bounce or a break. It's still loud? Really? All right, I reduced it big time now. I doubled it. It's generally not a good idea to front run up or down. The assumption that it will break or bounce, right? Because this thing can sit on this level for weeks, okay? And if this thing bounces, and it bounces, and it bounces, and it bounces, and then it breaks, well, all these little tiny bounces, we'll get into what it looks like on Bitcoin, but all of this stuff here is going to be just chaos for Bitcoin because it's not a clean trend, right? Bitcoin's going to trend whenever this thing figures its life out, and until it breaks this level, it's going to be Chop City, okay? Until the level decides whether it's going to bounce or break, BTC will be Chop City. And when I say Chop City, I don't mean like intraday chop. Like, yes, I mean like macro chop. Like, look at this. It just gave back multiple weeks of bullish price action, all because Dixie had a little tiny bounce, right? So, wait for monthly close to see if we break support. Be patient. All right. That's about all I want to say about Dixie. It's kind of just the same shit I've been saying for weeks. Nothing new here. Right? Any questions on Dixie before we move on to the stuff everyone actually cares about? Okay. Okay. Also, I'll point this out. If you want these stream notes, you don't have to sit there and write them down. You can join my Discord here, and you can find them in the stream notes section. So I'll post them after the stream. And if you want to grab the notes there, you're more than welcome. I just copy and paste it from my notepad to the chat, and I also post replays of the streams there for the context. Okay. All right. Let's look at Bitcoin now. Okay. So a lot of really interesting things are happening on Bitcoin, and none of them are all bullish. So first and foremost, the obvious thing is this giant rising wedge has very clearly broken down, right? It had this well-defined level, and I think it was like right at the market power hour. Yeah, it was like right here was when we did the power hour on Wednesday. You know, the super stream. It was breaking down, and ever since then, it's continued to bleed down 6%. You know, not the craziest amount, but the thing is like if things go a little bit lower, we could see a pretty aggressive move to the downside. Okay. The target of this rising wedge we can roughly calculate by just finding the swing low and the swing high that initially formed the boundary. We get $4,500, and then we just project it downwards. So we go 4,500 to the downside. You know, roughly 4,500. I think it doesn't have to be exact. And we get this zone. We get this target down here, right? Now I have this large red zone, which I'll go into detail here in a second, but it's right in line with what I'm targeting. Okay. But the most obvious thing when you look at this chart should be we are breaking down and have broken market structure, right? We had swing low, swing high, swing low, swing high, swing low, swing higher, and now we broke the swing low pattern, or the swing low trend. And here is the swing low, here is the swing low. We've busted it. Okay, if we bust this fella, that's where things are going to get real spicy. So we need to watch how this level gets handled, because maybe it comes down and it just kind of wicks it and it bounces. But if it doesn't, there's going to be a metric shit ton of stops under here, because of how long this market consolidated here. It consolidated there for almost a month. It began the consolidation back in beginning of March or mid-March, right? And so pretty much everyone who's a bull, anywhere in here, especially if you bought this breakout, obvious stops are down here. So going down here, sucking up the stops and bouncing, definitely on the table. But so is an aggressive stabbing move through this to find deep stops all the way down. Sometimes we get a move where it comes down and it bounces. Cool. Like it will take the form of something like this. So if we go back in time, right, something like that, where it took out the swing low and then proceeded to bounce, right? Like totally possible. But in other cases, there are plenty of instances where it didn't do that at all, obviously, and support breaks. So let's look at some examples of that as well, just to keep that in mind. So let's find an example here. So here, for example, right, not exactly the same thing, so it's not a perfect analog, but it's pretty close, right? We have swing high, swing low, swing high, swing low, swing high, swing low, swing high, come down, take out this zone, bounce, and then it retests it again, and it nukes. So the fact that we've cleared liquidity here before doesn't have me hopeful that it's actually going to come down and bounce, right? We've done this once already. Retesting liquidity zones like that more than one time generally aren't the best and strongest things. And so I'm personally leaning more toward a stabbing move that pops this and keeps going deeper than people are expecting. What it does from there remains to be seen. But for now, I'm targeting this $4,500 move to the downside, which is 25,000 basically. So let's go ahead and make some notes here. Let's say mid TF, mid time frame TF has a very clear rising wedge that is breaking down pretty aggressively, honestly. The volume's been pretty high. I mean, nothing that's like outlandish, nothing like here, or here, but it is a notable outlier, right? If we look at this, like the moving average of volume down here, it's consistently above. So it's, it's above the mean, right? I'll say fairly aggressively. Fairly aggressively. Target, what did I say? 25,000 equals $25,000 based on measured move. Okay. Now, when we look at higher time frame stuff, like when we look at like weekly charts, right? I have this red zone here because this is the, well, let's get daily first. I have this red zone here because this is the approximate neckline, and I say approximate because in crypto we have so much slippage on moves that having a hard level where it comes down and bounces just usually doesn't really happen. And usually what ends up happening is it forms a zone. So we have like this very clear zone of prices here. And this forms a neckline of this head and shoulders bottom here, right? Here's your neckline zone. And why I have this on my chart is, yes, the rising wedge target is in here, but this is a point of invalidation for me. If we start closing the market down below here, like somewhere down in here, we start closing dailies, and especially if we close weeklies, that would represent a breakout failure, in my opinion. Typically when we have head and shoulders bottom, something like this, we have like a descending or horizontal neckline. And ideally, we don't want to see it retested at all. Those typically hurt performance in the long run. So we want to see a clean breakaway. But if it does get a throwback, it's not the worst thing in the world, and we want to rally. But what we definitely don't want to see is a head and shoulders bottom that comes down and closes well below the neckline. Because what that means is that it trapped a ton of bulls, okay? Everyone who bought this breakout, everyone who's leveraged along, everyone, they're going to be watching this like a hawk. Everyone who's waiting patiently to buy the neckline, buy the throwback, they're going to be watching this like a hawk. And their stops are most likely going to, their maximum pain point is going to be under this right shoulder. And so a lot of times what ends up happening when we have fake breakouts, the market will close down here and it will aggressively hunt this shoulder. And sometimes it will even hunt the head, right? So there's these key levels that we have to watch. And the most important one, the most crucial one, TM, is this zone of prices right here between 24.5 and 25.2. Okay, so high TF, head and shoulders bottom has a neckline zone at, I already forgot what I said, 24.5, or zone between 24.5 and 25.2. Let's just say that. 25,200. We do not want to see dailies closing below that zone, and especially don't want to see weeklies closing below that zone. Okay. Well, I'll add one more note to this. So a closing below the zone would represent a failed breakout and would likely hunt deep stops on the bulls, on the breakout bulls. Okay. Now, when we're looking at this, is the assumption again, right? When we going back to Dixie, right? Should we front run the assumption this is going to break? No. Should we front run the assumption that it's going to bounce? No. Wait for it to happen. So until this thing closes down here, this, in my opinion, this is buy zone. This is buy territory. Everything in here, this is buy zone for me, right? This is not financial advice, NFA. But for me, this is buy territory. This is take profit on shorts territory. And if it keeps going, then yeah, you get the fuck out of Dodge. Easy peasy. So the safe option when you're watching this is watch the daily. Don't front run the close of the daily, because maybe it goes down and the daily closes above here. It's really important to wait for candle closes. It's really tempting to not want to wait for candle closes, but if you wait for candle closes, you get a stronger signal than, trying to front run whatever the candle's doing. So maybe you blind bid this. Maybe if that's in your risk profile, maybe if you're good at managing risk. The safer 80 IQ option is don't blind bid this, but wait for it to accept this and close either on this level or above it, right? So maybe it comes down and bounces and it closes up here. What we definitely don't want to see is, which would suck, right, is if you have layered bids and it just knifes through here and it closes down here. Well, then you're just eating a fat loss. So there's a trade-off here, right? Do I go full bore and put my whole bag on the line here? Probably not the best idea, right? But if you're managing risk and you're like, okay, I put my bids here, I'm willing to take a 5% loss somewhere down here, maybe you do that. But for most people, the best option is to wait for the close of the daily candle. Does that red, okay, question here. Does that red zone align with the 61 Fib retrace from the recent high? From the recent high? Oh, you mean from here? No. Depends on what you're asking. Are you asking from the swing low here? Down from the high? What do you mean? How can you have a 51% retrace of something that didn't happen yet? That's not how you use fibs. You can't, it wouldn't be a retracement if it hasn't happened yet, right? It would be a projection. Okay, so let's add some notes here. So closing below the zone would represent a failed breakout and likely hunt deep stops on the breakout. On the, let's reword this better, on the bulls that bought the breakout. Crystal ball fibs? I'm not sure what you're asking me. I'm not sure what you're asking me. Sorry. All right. What else are we asking? Or what else are we saying here? Okay. So let's go. What are some ways to trade this? Note. We should always be considering what if I'm wrong, right? I get a lot of criticism from people, not so much these days, not that I'm like rubbing this in anyone's face, but people always want to criticize me for giving the bearish option for things, and it's like, this is how you don't get caught offside on trades, right? If you manage your expectation, you manage your trade, you have a plan. Like, yeah, the no-brainer plan, if you want to just hear bull porn all day, it's like, yeah, it goes up, cool, end of story. That's like the most boring thing to talk about in the world. Well, what if you're wrong? What are signs that I'm wrong? How do I know when I'm wrong, right? And if you're never exploring how to know when I'm wrong, you'll never make it out of this thing alive. So when we're setting up trades, right, I'm walking through the psychology of how I'm personally going to be managing buys if it comes down here, right? And the number one thing is, what if I'm wrong, right? What does being wrong even look like? Right? So we know what being wrong looks like. Being wrong looks like daily closes below the zone, definitely weekly closes below the zone. I would give it some leeway, like if maybe it closes down here. If you have stops down here, like maybe you're like, okay, it just barely closes below. It doesn't have to be that binary, but we need to manage risk, right? So manage risk. Typical risk profile varies from person to person, but in general, managing preventing anything more than a 5% loss is unacceptable. And this is like at most, right? At most 5%. What else do we want to say? So, okay, so how would we trade this, right? So let's say you have $100, right? Just easy, clean number. We have $100. We bet $100 worth of Bitcoin. We put a stop somewhere down here such that if I am wrong, the most I stand to lose is $5. Okay, so what does that mean? That means if you're unleveraged, that's a 5% move. So if you bought, let's say you bought at the bottom of the zone, a 5% move, somewhere down here, right? Let's say you had all your bids perfectly timed on this bottom level. You'd put your stop here, and that would take the form of either a manual daily close below here, and you manual stop it, or you say that's the lowest I'm willing to watch it stab deep below the level. Because sometimes we stab below and bounce, right? That's why I was saying wait for the daily close. But if you're going to blind bid this, meaning you don't wait for the daily close, this is how you'd manage that trade. So it comes down, bam, your order gets triggered, you're happy, right? But then it keeps going down. It keeps going down. And that turns into a sad face right around here. But you know it's not going to be a sad face with tears because you're out of the trade here. And even if it keeps going down, you're out, right? So we manage the loss. We cut the loss at a maximum of 5%. Or whatever your risk profile is. Maybe you have a higher strike rate and you're willing to take a bigger loss. Or maybe you have a lower strike rate and you're saying, okay, I'll cut my losses at 2%. Maybe that's the case. But it varies from person to person and your personal trading style. So an example trade would look something like this. I need more symbols. I got numbers, letters, Roman numerals. What's another one? Whatever, I'll use numbers again. 1. Place blind bids. Or place limit orders at your level. Place accompanying stop loss such that if the position moves 5% against you, you cut your losses and exit the trade. And this isn't something manual, right? This is something that's like you just do it, right? You place your limit order, you place your stop loss immediately. This is all one package deal. So this is let's say this is option 1. Option 2, a riskier option, well-defined option. What are we watching here? A tutorial for brain dead monkeys. Yeah, something like that. Option 2, you wait for the daily close above the zone and buy on the daily close. So the reason why I say it's riskier is because you can't take as big a size. So let's say, for example, the market comes down, boom, it bounces and it closes up here. Well, where's a 5% loss from up here? Somewhere down here, right? But what you can do is you can size this accordingly, right? So maybe you've been dollar cost averaging, right? You've been dollar cost averaging all the way up, boom, 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 boom. What this tells you is if you've already built your position, this is your invalidation point, and closes down here, say get out of whatever profit you're in, right? So let's reword this. So option 2, not a riskier option. It's if you already have, I'll give you 3 options. If you already have a position open and want to know when to close manually. We'll define option for an initial entry. Okay. Sorry, I'm like very anal about my notes here. You wait for the daily close above the zone and buy in the daily close. Let's say this. If you wish to add to an existing long position, you wait for the daily close above the zone and buy above the blah, blah, blah. Okay? If the market begins to close below the zone, you manually cut your not your losses, but you manually close your position and wait for the next trade setup. Does that make sense? I feel like I doubled back on a couple of things I said, so this might be confusing. So let me know if this is confusing, and I'll clarify anything. Okay. So let's look at some other things that give us further information about where the trend is likely going. Okay. So on the daily, very well defined, right? We're starting to see the throwback to the neck. We've already talked about this, right? But if we look at things like the weekly, we are setting up things that hint toward a deeper pullback. I've been talking about this B-Band's midline on the weekly for a while, and the fact that we closed last week with a big-ass bearish engulfing has me thinking we're probably going to pull back to this midline. This is showing signs of a B-Band's M top, a reversal, and the target of that is the midline. And it also happens to be the neckline. If we draw the neckline on a weekly time frame, we could easily see a stab down to this midline here, and a close above here. So say you're trading weeklies, for example. Maybe you're trading real high time frame. This is a great option, right? You bid the midline, and if it closes below the midline, something like, say you bid the midline and it closes below the midline, you get out of your trade. Bam. So there's multiple ways to play this. And why are we even talking about getting out of the trade? Because a failed breakout usually hunts for liquidity, and liquidity exists below the head and below the shoulder. So if we fail to hold this as support here, if we fail to hold this as support, these are logical targets. Oh, this is CME futures. My bad. But I mean, it basically looks the same. Something else that's not very promising is if we look at GBTC, which is Grayscale Bitcoin Trust, it has rejected this cloud. And this is something that should be really concerning. The fact that we rejected the cloud means it was a failure to edge, and it's confirming this as resistance. And exactly like what I was talking about a couple weeks ago, if we reject the cloud, it's very possible we trace down the whole bottom of this cloud until ultimately either coming up or rejecting, right? There have been many, many instances of this happening in the past. Here's an example here of Sophie. Let me clean this up a little bit. You get rid of everything. Boom, boom, boom. Okay, so we're looking at just the cloud now. So here was a failed edge to edge, right? Failed edge to edge. It traced the bottom, tried to poke it again, and it got rejected, right? Failed to break through the cloud, got rejected. Here's an example of one that very similar to our current setup. Tried to edge, trace the bottom, eventually edge to edge, failed to trend above, and came back down. So we need to keep an eye on how it's treating this cloud on the weekly, because that's going to be very informative going forward. On the weekly, it's very clearly confirming resistance here. So this is concerning, because this could easily lead into a slow bleed to the downside. Thank you for the sub, Nook. Oh, you did a gifted sub? Nice. Thanks, Nook. Man, this is really unorganized. How do I need to reorganize this. GBTC. Now, keep in mind, this is not Bitcoin, but it is a portfolio that has exposure to Bitcoin. And generally, GBT strength is paired with Bitcoin strength, and GBTC weakness is paired with Bitcoin weakness. So what's bad for GBTC is overall bad for Bitcoin, especially when we see things like this, where it came up, perfectly closed this gap. I guess not perfect, but it did hit the wick and reject. Like, that's not good. Anytime the market has a perfect setup and it doesn't take the opportunity to run, that's not a sign of a strong market. So anytime we see, like, let's say hypothetically, right? We have a level, it's like boom, boom, it's testing this level, and it's like, oh, it's gonna go, and it goes boom, and it hesitates and it closes back below, i.e. a breakout failure or breakout hesitation. This is a very bad sign, and usually a sign that it's gonna knife very aggressively to the downside. So whenever we see things like this, where it sets up an edge to edge, and it's like basically a flashing green light, like go, 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 long, 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 long. This is a long signal. This is a long signal, and it fails. This is not good. And this says to me, very likely we're going to see many, many more weeks of downside. Does that mean it's going to be just straight down? No. But I do think that it's going to be more down than up and longer than people are expecting. So many people were too hyped on this breakout, and I think they're going to be punished for that. So weekly edge to edge is now invalid. It has closed below the cloud, thus confirming strong resistance of the cloud. Watch out for the weeklies to trace the bottom edge of the cloud. Sorry, that is what it is. Going back to Bitcoin, if you look at the Bitcoin weekly cloud, not the same picture yet. But it did close a big ass bearish engulfing, which is immediately concerning. Let's go back to Bitcoin here. Just a lot of notes. Weeklies. Let's say weekly. I'm gonna reorganize this. So mid time frame. High time frame. That'll be easier to parse through later. Here we go, weekly. Weekly closed a big old bearish engulfing candle at the top of a prolonged uptrend. And I really want to focus on this. I'm going to reference this again here in a minute, but this is really important that we're doing this on the top of an uptrend. Weekly closed a big old bearish engulfing candle at the top of a prolonged uptrend. and is setting up. Actually, it's not even setting up on the Bollinger Bands. This is not setting up. This is now a confirmed M top. The confirmation comes on the red close following the new high. It's not the cleanest thing in the world because like I want to see swing highs and swing lows like that. But it is there. We can see it here. Right? It's like if you gave your 3-year-old a crayon, you're like, draw an M. Like this is their M. But it is there, right? Which would target the midline. Weekly candle close a big, get that out of there. Big bearish engulfing candle at the top of a prolonged uptrend, and and has a looming Bollinger Bands M top, asking for a revisit to the weekly midline. So this is going to be a dynamic target, but I'll say currently at 23.6-ish. Currently 23,600. Note, V-bands targets are dynamic and subject to change. Meaning, maybe the midline creeps up a little bit, and so it, tags it somewhere up here, right? Like, totally possible, right? But I want to focus on this this bearish engulfing candle. Okay, bearish engulfing candles in uptrends have a very high strike rate of prolonged pullback. Okay, let's look at some of them. Here's one. Here's one. One. Here, how do I? Let's. Here we go. Let's see that. Boom. All right, here's one. Damn it. Here's two. Here's three. And I'm only looking at the ones that are in an uptrend. Okay. 4, 5. Six. 7. 8. Okay, so they're not super common, but they have a very high strike rate. So if you look at this, we have out of the 1, 2, 3, 4, 5, 6, 7, 8, 9. Did I count that right? Out of the 9 we see here, almost all of them had a following red week. Okay, so this one does not count. This one counts. 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 Sorry, not a red week, but a continuation. Boom. Boom. Actually, I don't know if this counts. This one does not count because it moved up afterward. Question mark. So out of these 9, only 2 of them bottomed, right? So chances are we are actually going to see more red, right? And if we go back and get more, that's in bear market, bro. What are you saying to me? It's even worse in a bear market. Like if we go back in time, we get more data. It just further supports this thing. Boom. Boom. Just going to go back and label all of these. We'll count them together as a family. So Blinkenstein, this was not in a bear market. This is a bull market. Getting a bearish engulfing in a bear market, which in my opinion we still are in a bear market. If we're looking at this on a weekly time frame, this is just like look at this. We just hit a throwback to a major level. Like this is, in my opinion, this is not a macro bull market. It's just not there. Oops. So, I mean, I don't think I need to go through and count all these, but it's very clearly a common theme that when we get weekly bearish engulfings, the vast majority of the time, right? Like here's one that didn't, but here's one that did. Boom. They usually lead to more downside. Weekly bearish engulfing closes at the top of rallies have a very high likelihood of reversing for multiple weeks. This is really important. This okay. If we go back in time, we get more. Like forever. And this is just a general rule of markets, right? Whether it's equities, gold, or whatever. Weekly bearish engulfing, monthly bearish engulfing are very, very strong indicator of what's to come. This is a canary in the coal mine. This level is your lifeline. If this does not hold, this is very possible a situation like this, right? Where it could come down, boom. Or maybe it bounces and reverses. Or maybe it comes down here and then does COVID type things, right? We don't know. We don't know what it's going to do. And anyone who tells you that they know what it's going to do, you're full of shit. But all we can do is we can just collect clues and make the best guess possible with our best set of objective tools, not what we want to happen. So long story short, this is the level to watch. This is the level I'll personally be buying. This is, if that breaks, I'm getting out of that position so fast. Risk to reward's great there, right? All right, any questions about this stuff? Like if we look at this objectively, right, and we just flip this thing upside down. Would you buy this? This is a big long signal, right? If you're looking at this and you're a bull, look at that, bullish engulfing after a massive throwback to a breakout. This does not say bearish weakness. This says bullish strength here. And accordingly, if we flip this back the way it was, same deal, right? This does not say bullish strength. This says the bears showed up when they were expected to at a very obvious level And now we need to see what they have up their sleeve. All right. No questions, no nothing. All right. What do you guys want to look at? If you guys don't have any coins you want to look at, then we'll call it here. But that's what I'm looking at right there. It's very, very cut and dry for me. You want to look at Jasm? Jasmy? And I hate to break it to you, for all you guys that trade all these altcoins. If Bitcoin goes down, your shitcoin's going down too. I don't make the rules. It's just how it goes. So this coin doesn't look like it's doing anything very cool. It's very clearly in a downtrend. Yeah, the fact that it closed a daily below this B-band's midline is a big red flag. This is a big red flag. I would expect to see a move to the bottom B-band. I'm going to look at Coca-Cola. All right, my man's an equities trader. Let's look at it. So with Coca-Cola, you got to look at it on like super high time frames. Oh, it's kind of doing like a little breakout, huh? It's kind of got a reverse head and shoulders on the weekly. Oh, yeah, it sure does. Hold on. Sorry, my dog's barking. Mail time. Let me close my door. One sec. All right, we're back. Yeah, it does. It has this like head and shoulders bottom thing. Yeah, this actually looks pretty good. So it hasn't quite broken the neckline though. Neckline would be, something like this, rough and dirty. Any close up here would be a breakout for me. I do like that it's at the top band. Don't like that it's getting rejected. But it's Monday on a weekly candle, so still plenty of time on it. But yeah, any close up here, it's a nice setup. Pancake? What the fuck is pancake? You kids. Oh my god. Okay. Oh, this thing's eating a big old turd sandwich. Yeah, this thing looks like ass. If this thing breaks, it's going to almost certainly hunt for something down here. It has zero support here. Zero support there. And if that pops, it's gonna go. Right? zero support, and that would most likely coincide with a Bitcoin breakdown, right? I want to look at link. Got you a link chart. Oops. Chain link. So link, my dear boy, looks like a flaming pile of shit. I was really hopeful on link, but this is again why you wait for candle closes and don't front run candle closes. Okay. You're looking at this trading range, right? And it looks good. It looks good. Looks good. But this is such a big range. You should look at the weekly. And the fact that this closed a big bearish engulfing off of what looked like a breakout, this is a no-go for me. I don't like this. Don't like this at all. A lot of things that were once looking hopefully bullish and things that people were calling bullish just because they were hoping it was bullish are starting to look really bad. How do I find what crypto you're trading today? I don't trade anything other than like Bitcoin and Ether sometimes. That's it. I trade, stocks and stuff like that, stocks, metals, stuff like that. But I don't trade altcoins. I'm just doing it for the fam, bro. My boys want altcoins, they get altcoins. All right, so there's your link. I'm not hopeful on this one. Maybe it comes down and it springs, boom, and rallies. But this is the final boss. This is the level to beat. This is what I want to see flipped as support, is this zone up here. Once again, guys, if you want these show notes that I have on the side and you find them useful, you don't have to write them down. I post them on my Discord, and you can find that link here. Also, if you are interested in doing like mentorship or one-on-one stuff, I also do that as well. And I also have a trading group, which that is not free, but the Discord link that I posted is free. All the links, all the content, all that stuff on there, that is free, and you're more than welcome to join. If you're interested in joining my trading group, you are more than welcome, and you can submit an application that is on the Discord. You want to see silver? Yeah, I got silver here. Silver is right here. I've been watching silver for years now. This thing moves at like the speed of boomer, as Josh Olszewicz likes to call it. Still waiting on this one. Very obvious downtrend is obvious, and it has not broken it yet. You can make an argument on the weekly that it has. So weekly, I would feel comfortable front running this, but again, I definitely don't want to see it closing back below here. If it does, that's a get the hell out of here. But weekly, the monthly is really what I'm watching. I want to see the monthly closing on this upper. I want to see the monthly closing on this upper B band. That would be super cool and in a hint toward a continuation to the upside. So since we're looking at silver, let's look at gold. Gold, yeah, and don't get me wrong. Like, I'm uber bullish on both gold and silver. I've been following them since basically 2018, and just waiting for this thing to break out. Weeklies on gold look great. There's a level here that it looks like it finally overcame. It broke through, had a chance to fail, and it didn't, and now it's showing some support. We still have 4.5 days left on this weekly candle, so don't count your eggs before they hatch. But definitely watching this gigantic cup and handle for a multi-year breakout. Yeah, definitely keeping an eye on this one. Very, very bullish on gold. Man U. Okay, Man U. Manchester? What? Manchester United? They have a coin? They have a stock? You can buy stock in Manchester United? Did not know that was a thing. Okay, so this kind of stuff right here, it sketches me out. Anytime I see an impulse from the bottom of a range that clears resistance, especially when it does it like this is very sketchy and often completely retraces what I call the impulse route, which is like the swing low that preceded the impulse. Very common for this thing to get retraced. Yeah. So I would be very worried about this one. It's kind of sketch. We can look at some of the other equity stuff that I'm keeping an eye out on. So Costco. Costco looks very, very promising. Weekly closed. Not a higher high yet, but man, these B bands are squeezed. I'm just waiting for the weekly close on this upper band, and then that's a fat buy signal for me. Monthly looks great too. Super, super consolidation. This is very reminiscent of Ether, around $47 for me. I'll show you what I mean. Gotta go way back in time. This was the chart that got me famous, right? Reminds me of this gigantic bull pennant that broke north. Actually, I guess if we look at the daily, it's probably better, huh? Yeah. Just look at this picture perfect bull pennant. Clean B bands. Very reminiscent of this. Obviously not a cut and paste, but pretty damn close, right? Giant bull pennant. This thing has infinite upside potential. Who knows? Costco is a monster that just does not pull back, and your hot dogs will always be $1.50 or whatever they are. So as long as you're making $1.50 hot dogs, man, this thing's sky's the limit for Costco. So waiting for the long signal. Obviously, if you're a bet man, are you betting that you're selling the top here? Fuck no. Like chances are this thing's just going to keep going, but obviously want to be safer, better safe than sorry. So just waiting for the weekly close on this fella here, and that's going to be a big old buy signal for me. That's Costco. Still watching UBS. The fact that this is such a huge time frame, I honestly don't really know how to trade it. The obvious play right now on the monthly is buying here, right? If the monthly closes anywhere here or above, this is a big buy signal for me. UBS is the group that bought Credit Suisse, and they're currently setting up the world's largest edge-to-edge on the quarterly cloud. So here is a great buy signal. I'm not waiting for a quarterly candle to close, but a monthly candle is good enough for me. It's been in this huge range for forever since the housing collapse. Had a perfect spring, a rally. And so if we close the monthly up here in 4 days, wait, 4 days? How's the monthly close in 4 days? That's not right, is it? That can't be right. Why is it 4 days? I wonder if it's because it's a Swiss exchange and maybe they have some different rules. But either way, watching for this thing to close up here. If it closes, this is the final boss. This is the level to beat. If we flip this, boom, big buy signal for me. And obviously, QQQ and SPY, watching those on higher time frames for breakouts. Weekly candles, I want to see this thing breaking through. Not there yet, so it's a wait and see for me. B bands, obvious detachment is obvious, right? Like it's not trending with the upper band. I want to see something more like this, and it's just not. So this gives me a point of hesitation, but I am optimistic, right? I'm watching this on the weekly time frame, and same story on SPY. So SPY, which is the S&P 500, looks a little better than Nasdaq. Nice consolidation here. I just want to see the B bands attach up here, and they're not doing it yet. Also on the verge of a cloud breakout. So it's like this is QQQ in the future, right? So watching both of these like a hawk. A lot of potential on the board. A lot of good things on the board. And if Dixie can break through this level, the one that we started the whole stream on, if Dixie breaks through this, stocks are going through the roof, in my opinion. So a lot of stuff waiting over the next few days. You want to see FRC? What the hell that is? Let's look at it. FRC. Is it this one? The First Republic National? Oh, this one. Yeah. Jesus. Okay. I mean, I don't. What do you want me to tell you here? Do you need me to tell you something about this? Come on now. Come on now. Shit's down 92%. Okay, how about this? Let's have a conversation here. What do you think about this chart? Are you asking me if I think it's a good buy opportunity? I do not buy things like this, like retrace 99% and just sit at the bottom like that. This is asking for some sort of big bounce off the bottom, I guess, man. But things can go negative 99% indefinitely. This thing can retrace 99% again, easily, right? And then guess what? It'll bounce and it'll retrace 99% again. So and this is like, go away. This is not interesting to me. I mean, it's interesting to look at in a sense where it's like, oh, look at that, like what a freak. But nothing about this says, hey, buy me on the off chance that maybe you're wrong. What do you think about S&P? Are you expecting a crash in stocks? Crash in stocks in general. Asking if I should rebalance 401k to less risky portfolio. I think I just answered that. Really. Moral of the story is waiting for Dixie to figure its life out. But I mean, stocks look like they're ready to go. They look very promising. Or when I say stocks, I don't like that's just it's just a lazy description. But many stocks that are harbingers of good economic and forecasts are looking good. Are they good now? No. But it's like when you're baking a cake, the cake's going to be ready in half an hour. Should I just go and stick my hand in the boiling hot oven and melt my skin off and on the off chance that maybe it's done? Probably not, right? Just wait. Wish is up 20% last week, but down. Okay, let's take a look at Wish. Wish. Is this it? Context Logic? Oh, nice. Big earnings. Yeah, it's up big time. Yeah, it's up big time, guys. What a bounce. Earnings are crushed it. Meanwhile, Louis Vuitton. Is that a publicly traded company? Is this it? LVMH? Huh. I mean, yeah, it looks exceptionally bullish, right? Um, yeah, look at the thing go. Yeah, even the daily looks solid. AF. It's in price discovery, so like who knows where this thing tops out, right? Could easily be one of these where it goes into price discovery and chops, or it could go into price discovery and just turbo send. Either way, I would be watching this for. I'm always uncomfortable buying tops. I'd rather buy a little bit of a pullback. So I would watch this and definitely this. You come from a scalping background? Yeah, I don't ever scalp stocks. I mean, I definitely scalp crypto, but I just don't. I don't know. With stocks, equities, things like that, I would much rather trade trend than scalps. I'm just not good at it. I mean, I know people that are good at it, but it's not my cup of tea. It's not my forte. But I mean, if you're able to do it, then yeah, all the power to you. Like, go for it. So like here, for example, right? Like when we're looking at this Louis Vuitton chart, is there a scalp short here somewhere? Probably, but I would rather wait for a mean reversion of some kind. On the daily. So this looks really good, actually. This Louis Vuitton chart looks really good because look, it already had its throwback here and it sent it. Broke out, threw back, boom. Turbo send, right? So you probably won't get a mean reversion on the weekly anytime soon. I would look at the daily. Any midline on the B band, daily midline, is a buy. Definitely smaller size bids on the Tenkin, larger on the Kijun. But this thing is like super super bullish. This is really good. Is this news driven? Like why is it going so hard? Do you know? It looks fabulous, but it's already a $500 billion clothing brand. Yeah, but don't ever. This is something I've just learned from crypto. I don't know if you ever trade crypto, but it's something I've learned from crypto. Don't ever think that the value of the stock or the coin should ever make sense. Should ever make sense, right? Just trade the chart. If you try to rationalize things like, oh, this is expensive or this is overvalued based on like no evidence, you're asking for a bad time. All right, you want to see coin? Yeah, let's take a look. Coin is looking like a turd in the punch bowl. So coin, I was warning about this weeks ago. Lower highs are never bullish, right? Failure to break market structure should be seen with skepticism at minimum. We're seeing a series of lower highs, and sure enough, we're seeing this giant dump on the daily, right? This, like GBTC, like Grayscale Bitcoin Trust, are different indicators of the health of crypto. So this being bearish is another sign that, Bitcoin's probably in for some more pain. But this objectively looks like trash. Like this is the beginning of a new trend. Bitcoin squeeze, attachment. Well, I mean, we still got 36 minutes left on the daily, but I think it's fair to say it's going to attach. This is the beginning. This is the birth of a new downtrend, especially following the failure of the upward breakout. Can I look at Mara? What is Mara? Marathon? Is that what you're asking? Oh, Marathon Digital Holdings. Okay. Yes, but weekly and monthly, though? What does that even mean? What are you saying to me? Use full sentences. I can't read your mind. So this actually isn't as bad as Coin. And I say that because coin is currently breaking structure to the downside. This is retesting it from the top. Definitely a line in the sand, though. If it closes anything below this, that is sketchy. But closing anything around here could be okay. Again, I'm not a fan of these. Yeah, this is sketchy. This is sketchy because look, it rejected the cloud. It's doing all of these things that are typical continuation signals to the downside. So this is sketchy. Things are like, I'm not a buyer when things are in obvious downtrends. I don't want that. I want bottoming behavior. This is not showing bottoming behavior. This is showing these are showing all the signs of continuation signals, not reversal signals. For Bitcoin. I'm not day trading this market, so lower time frames I'm ignoring. So okay, so what about weekly and monthly? Do you see that as bullish? Because I hate to break it to you, but your boy looks like shit. Okay. Weekly slamming into world's most obvious resistance and getting shat upon. So anyway, I need to get some water. Again, if you want these show notes from the earlier discussion, head over to Discord here. If you are interested in doing like mentorship or like one-on-one type stuff, or like you want to learn a certain thing from me, always available for that. And then also I have a premium service in my Discord for a trading group. So if you're interested in doing any of those things, all of that is available in my Discord, and also the free content is there as well. So we'll go ahead and wrap it up here. We'll pick it back up on Wednesday. I imagine we'll see lower lows by then, if I had to guess. And then, yeah, we'll just take it from there. But you guys have a great rest of your week. There's no this week or this Wednesday is not the power hour. That'll be next Wednesday, right? And that'll be on Jackstream. But thanks for everyone. Thanks to everyone who joined. If you heard about me from the Power Hour, that's great. I had a bunch of new followers today. And listen, anytime you guys have the opportunity to share the stream or like share the videos that I make, like that goes a long way. I'm slowly starting to creep up in viewership. A couple weeks ago, going back even a couple months ago, I was averaging about 40 to 50. Now I'm averaging between 50 to 60 viewers, and even on the slow times, I'm getting like 49 right now. So like that goes a long way. So, if you ever get a chance to, like, subscribe,